All right. Good morning, everybody. We're gonna just start a few minutes early. That way we can kind of do a little commercial maybe for the Bullish Bears. Been working on the next level library. We're going to be coming out with new videos over the weekend. I'm going to be uploading them to uh, to my to my site that I put them on, and then hopefully next week we'll see those on the next level library. The new videos that I'm bringing in cover futures, options, not much stocks videos this week, but I think in March I'm going to have some new videos for stocks. Uh, I've got some swing trade videos that are going to be coming out, and I just did a few swing trade strategy videos that cover stocks and options. But yeah, this weekend, real big upload should be coming to Venmo or Vimo or whatever the video site is. And then next week, they ought to be up onto the next level library. So be on the lookout for that. If you're not yet a member of the Bullish Bears, you ought to come check it out. That next level library is designed. Well, first we got courses, and then we've got advanced courses, and then we have next level, which goes beyond advanced. Uh, for options, especially, that's where we really get into the nuts and bolts and into the weeds of things: strikes, duration, expiration, management, being able to take a trade that's losing and doing something more with it than just closing the trade down, right? Being able to roll it, convert it, add to it, to do something with it. With options, we just have so many choices, right? And that's kind of where that next level comes in, kind of takes things up a notch. So if you haven't given us a try, go on over and sign up for the trial, join up, take a look at that next level library. All right, I'm done with the commercial. We can get in, bring in the other crowd, the Zoom team. All right. Good morning, everybody. I was just on the stream with YouTube before I started the Zoom, talking about the Bullish Bears and the next level library. If you haven't really dug into the next level library yet, and you're a member of the Bullish Bears, you're missing out. One of the things that you paid for was access to that educational content. Uh, Spent a lot of time and effort building out those video series in the next level library, and we got a whole new group of videos coming in. I don't load them onto the website, so I don't know how quickly they'll be put into the next level, but I've been creating a lot of new videos, and you want to be on the lookout for those, like stocks, options, and futures, day trades, swing trades. So just keep your eye on those next level. All right, first thing, we always want to look at the economic calendar. It's the first thing we want to do in the morning. Check the calendar, see what's on the agenda today, see how many of them have a high impact expectation, and at what time. I like to go to FX Street because it provides this little additional sentiment on the dollar. Like I've said more than once, we need to have an understanding of why the dollar is moving. And there are times where the dollar is a reflection of global risk, and it really kind of mimics a US VIX style indicator. But then there's other times where the dollar is completely decoupled from risk, and it's more of a risk on sentiment. So getting a little background on why we're seeing a dollar, really make some exaggerated moves helps a lot. This is just a nice little addition before we get down into, what's on the agenda for today. And I'm not signed in. It's one of the nice things about going over to FX Street. You don't have to sign in, you don't have to sign up, you don't have to buy anything. It's a good place to check for economic events on the day. Don't just check one place. Economic events, whether it's Thinkorswim, FX Street, bar charts, wherever you go, they're likely to have additional events that maybe another one doesn't have. And even in the Discord itself, there's a command that you can give, exclamation point calendar, that will bring up today's economic events, including the president's schedule if he happens to, you know, have a planned presser where he's going to come out and talk. We had some pretty amazing moves yesterday, and we're now seeing comments on 100 basis point by June or July. Right? It's just like they keep hyping it up more and more. I kind of got into the description of this little trick that we've seen unfold for the last 2 months. And I won't go too deep into it today, but kind of think about how this all plays out, where it starts with they get, Bullard on the weekend on a media show, and they ask him, would you favor uh, a 50-point hike in March? And so, of course, he says, well, yeah, I mean, I would if we need it, but, and then the headline comes out and says, oh, Bullard says he'll go to 50 in March. Well, that's not exactly what he said. So then they hit the next Fed guy. Hey, Bullard says he'll go to 50. Will you go to 50 in March if we need it? And of course, the Fed is going to say, yeah, I mean, if we need it, I would support it. Boom, another headline comes out. Second Fed official supports a 50-point hike in March. And they went right down the list doing that. Okay, so then everybody is looking at it saying, oh, wow, we got all these Fed officials ready to bump 50 in March. That's absolutely not what was said, right? And if they got past the headline and read the article, they would see that little qualifier in there that said, yeah, I'll go to 50 if we need it, but I don't think we need it. And none of that was in the headline, right? Well, now they're talking about 100 points by June, and they're talking about a 95% chance that we're going to get a 50 in March. Even though the Fed keeps coming out saying, we don't think we need to go to 50. And they haven't done that in like 20 freaking years. But either way, right? So just kind of keep your head down a little bit on these rate hikes. And if you see the headline, click the link and actually read the story and get a little deeper on the background, right? So Market Watch on Thinkorswim, want to go to the calendar. I like to bring the event over and set it next to the time. So it's an easier way to read it. If yours is all cluttered and full of junk like this, just uncheck everything and turn on the Econo Day event. We got consumer sentiment and the rig count. I worked on drilling rigs for 20 years. That rig count has no expectation of impacting our marketplace. So by 10 a.m., we're done and we're done, right? We should have a free day after 10 a.m. to do whatever we want to do and not have to worry about another economic event slapping us down. That doesn't mean, though, that we're going to have a free day with easy trading, because just like yesterday, we started to rally up off of that low really nice. Now, this move and then the reciprocated play right back up again, consider that a gap close style move. I know there's not a gap, right? We can see the candles. There's not a gap there, but it left a liquidity vacuum behind. So the market immediately ran right back up to that previous level. And I've talked about this move before. This is a bigger one than we would normally see, but it's not an unusual situation to see a really big candle down and then watch price run right back up to where it started, kind of like hitting the reset button, before continuing in that bearish nature. Then we had started to kind of clean up a little bit. We were coming up off of those lows nice, across the board in different sectors and industries. We were coming back up nice. Then right before the 30-year bond came out, right before 1 o'clock, they had a Fed official out there chipping his teeth and flipped that market over right before 1 o'clock. So all they're doing is trying to get ahead of the Fed to price in these rate hikes. And there's still a big unknown about what they're going to do with the existing balance sheet. If they're going to let it run off slowly, when they're going to begin the taper process on their purchases. So there's three different tools at play right now. And in history, there's this argument that they've never actually done all three at once. And they don't quite know what they're going to get out of it. Right. So they're trying not to squash the economy at the same time that they're trying to squash all of this inflation. For today, let's kind of give ourselves a little more room here. We got the implied move, which probably needs to be reset, right? So we come in here, go to the Analyze tab, go to the Risk Profile. Don't put a trade in here, right? Leave the trade off. Make sure you're on a 1 standard deviation. Have it set for tomorrow. Set your price slices. 1 standard deviation. Make sure the lines are on each side. Well, we don't need the 0 because we know where we're at. So we'll delete that. Set it to the chart. Price slice 1 and price slice 2 is what I just brought in, because when I had the lines earlier, we were in a different location. So there's our expected move for the day. There's our range based on implied volatility and a 1 standard deviation move with a 70%, which is the 1 standard deviation, right? So there's your high and your low. That gets all of your emotions out of it. It's a calculated place. It just puts it on there. No fear, no angst, right? You don't have to think about it. It just sets the lines for you. We have a 2.3% ADR. That's based on a 21-day, a 1 market month average daily range, looking at where we opened to where we closed for the last 20 days and saying, how far did we move on average every day? About 2%. Well, right now we're basically flat. We've already burned more than 12 hours of the day. We don't have a lot of day left. We could make a 2% move between now and the close. It would just be a little unlikely. The blue line here where it says ADR high, that's pricing in that 2% from where we had opened. Same thing with the ADR low. Notice it lines up really close with the 1 standard deviation. It's a little more confirmation. While you're at it, look and see if there's a market maker move. If there's not a market maker move, it won't show up there, right? It just won't be there. Which is kind of tricky, because if you didn't know that and you went looking for it, you may think, oh shoot, I turned the darn thing off. How do I get it back again? You don't turn it on and off. It turns on and off on its own. We'll just randomly go pick something. Apple does not have a market maker move right now. The Russell does. The ES does, right? So when you're looking at the ADR high, or you're looking at those price slices, you could think about adding in that additional $22 here from the market maker move, and that's up or down. If you want to know more about the market maker move, go to the place that publishes the information about such things. The ticker tape. Now, in my volatility school, in those 20 videos, I talked about the ticker tape. I talk about the market maker move. I explain it in excruciating detail. But if you were to go here and type in something like, oh, I don't know, market maker move, you could find all of these articles that explain market maker move, what it is, how it's designed, how it's calculated, why it's used. and learn all about it for free. This is the ticker tape created by TD Ameritrade and focuses exclusively on the Thinkorswim platform. In the Bullish Bears large caps chat, I will post you the description of what it is, just in case you don't want to go over and read it on the ticker tape. Long story short, it is the difference between the front and the back implied volatility series. So it doesn't show up because there's an event. It shows up because there is a difference between the front and the back series. Yeah. So we got this ugly little kind of flat inverse head and shoulders. If we were to measure this ugly flat little inverse head and shoulders, we'll get two targets, the 50% mark and the 100% mark. I know it says 200, right? But 100 is from the top to the bottom. Okay, so it measures that much and then it plots that up. So that's 100% of the measurement. The midpoint is the first target. It's a lot of times that's all you get, right? So if you get your head and shoulders and it hits the 50, be prepared for that to be all you get. It doesn't owe you any more than that. If you do get 100% of the move, great, but plan for it to end at 50%. Critical line in the sand today, 4,500. We got to get back above that level. We didn't quite make it. We're still working on clearing out that liquidity. So keep your eye on the 4,500. Looking at the volume profile here, we've got volume by time and volume by price. By time is in blue, it's on the right side. This is basically asking how much time did we spend at any particular price. The point of control is where we spent the most time, and this is going back 10 days on a 30-minute. So in the last 10 days, we've spent the most amount of time at 44.80. Now on a 10-day scale, that doesn't really provide a whole lot of context, right? But on a day-to-day basis, if we run up and tag a real high spot on the day, right? Say we hit intraday high and we get a maximum amount of volume there, even though we spent seconds there, then we see there was a significant level of volume done at an area where we spent very little time. When you see the point of control on volume by time and volume by price in the same place, that kind of makes sense. We spent a lot of time there and we had a lot of volume go there, right? But when you see these two in completely different places, that we have a significant level of volume in one area and a very small amount of time spent at that area, then you know that where there was very large traders playing. Those very large traders in those very large trades that were done create volume nodes, NODE, volume nodes. They also provide temporary levels of support and resistance, and the shallow areas are indications of where there is likelihood that we would move through that zone very quickly. Notice the 4,500 where I said it was a significant level of resistance that we have to get through. It's the greatest amount of volume in the last 10 days. right there, 45.05. It's a critical level that we're going to really struggle to get through, especially today, right? On a one single day, trying to get through that level. If we do get through that level, however, it gets really shallow. So we'll be able to move through that area easier than we would trying to get through the beginning of it, right? The 45.05. So a huge amount of resistance right overhead. Very unlikely that we'll be able to make it through there without a significant burst of activity. It will have to be news based, right? Because we don't have anything on the market watch really. So if it does come, it should not be sneaky or subtle. It should be very swift and significant. You should see it in the tick, trend, AD, UVol, DVol. It should be all over the place, right? It shouldn't be subtle. Without that, it's very likely we're just going to maintain underneath that point of control and near the lows, right? So 44.40 to 4,500. It's a good 60-point range with a lot of structure on the downside and the upside that says that's pretty much going to be our day. Now, we can get out of that day. We can. But it's going to take a significant bit of news, right? So it won't be subtle. Shouldn't be like a slow grind out. Or the Nasdaq. You can see the ADR high and low is a lot wider. We want to come over to the Analyze tab. Make sure we've got a one standard deviation. Set the price slices a one standard deviation. Make sure visually check to see that those lines moved because think or swim, it doesn't always move the lines the first time you do it. Right. So then just check, make sure they're moved. Set your slices to the chart. It'll say the words price slice 1 and price slice 2. That's how you'll know the difference between your lines and these lines. So you can see the price slices for a one standard deviation move are very close to our 20-day average daily range. That's all we're expected to get for the day. But if we wanted to, we could also bring in volume by time and volume by price. We are just right now at the point of control, significant level of resistance. We have to get through that before we can do anything else. And there's another one near the point of control for time. So if we can get above 14,800, we do start getting into this shallow area, and we should be able to challenge the top price slice at that point. It's very unlikely we're going to make it through all of this, however, unless we get a significant amount of activity. And I just don't see it coming in there without some news, right? So we're going to need some kind of news event. Should be something that you could spot on Finance Juice. They do a really good job marking things out like this. So, it's easy to see. I am signed in, but I'm on the free account. So, even though it's the free one, it's still really useful to be able to answer questions like, "Whoa, what just happened? Why did that candle move? What's going on?" It's a really quick way to do it, right? And if you didn't want to do it that way, I built an alert Discord. And the link for this Discord is in the Bullish Bears. And it monitors Finance Juice, Bloomberg, Live Squawk, and it will get those for you. It monitors Breaking Live to kind of give you that same heads up, right? And the reason I like it on Discord is it'll pop up in the lower portion of my computer and let me know what's being posted here if I turn that on. You don't see it on this machine, but I got it on the other machine. The link for that, like I said, it's in the Bullish Bears. So scroll down to the resource zone, custom scripts, There's the Twitter package, and there's the Thinkorswim workbook. There's thousands of indicators in that Thinkorswim workbook. All right, we're getting the failed flag set up in the 4 indexes, the Dow, the Russell, the S&P, and the Nasdaq. That failed flag play is where we base along the lows and we run a reciprocation trade back up to the highs. Now, we already talked about all the things that are over our head that's going to make that really difficult to do. And I don't think that we're done basing, but we've already started to break out of the base and we're getting a Busby right now. So the setup is unfolding just the way it's supposed to. This lines up with the moving average crossover or the failed flag play. You can run it either way. It also ties in with an inverse head and shoulders play or the bottom of a cup, because we're expecting to get back to the previous level. And if you game that out, trend to the downside, base along the lows, trend back up, it forms that cup and then the cup and handle. So we're primed for a setup trade. I just don't want to swing this into the weekend after all the violence that we had. So what I'm kind of hoping is we do just stay along these lows. We stay underneath 4,500 for the day. And then on Monday next week, we start looking for our swing trade setups, right? And run that thing back up. That's the plan, right? We got plenty of room. So no reason to jump the gun. When it comes to the swing trades, I use the MES because if you're going to hold these futures contracts into the close, this one's cheaper than holding on to the MNQ going into the close. All right. So normally I'm an NQ trader, but when it comes to swing trading, I do the ES more. When it comes to the options on the futures, I always use the MES. Sell puts on this thing, it's cheaper than selling puts in SPY, right? Plus, you can get a lot farther away. I've got puts on right now at 4,000. Think about that. As long as we stay above 4,000, I'm going to make money in my put sells. It's a $500 put that I sold down there. You can't do that in SPY. You can't go to 400 in SPY and sell a put for $500. Nah. We're getting some moves in the dollar. Keep your eye on this. We're looking for reciprocation. We want to see it stabilize, right? We really don't want to see this thing rocking and rolling and jacking around all over the place. And look at the way that those algos came in and ran that thing up. How do I know it's the algos? Because it's running like it's on rails, right? You and I were sloppy traders. The machine is not a sloppy trader. Look how exacting and perfect that is. Besides, 90% of all trade activity nowadays is done by algos. The reason that it's not always so clearly seen like this is because usually there's algos fighting each other, right? Some algos are going long, some are going short, some are doing this, some are doing that. Yesterday, that was a very clear, very clean example of algorithmic activity. The problem is, as it's happening, you can't really see it, right? It's only looking back that you can point to it and be like, oh, yeah, look at that. This is algos are in there. Now, don't get hung up on algos. Everybody can make your own. Even on Thinkorswim, you can build your own automatic trading system where it will get you in and get you out and do everything that you want it to do. Heck, if you put a stop on, you just activated an algorithm. You told the machine to perform an action if and when something happens. Bum, bum, bum. That's an algorithm. The automatic trading system, it's not that complicated. I built one a few years back called Alfred, just like Batman's butler, Alfred, and it does an amazing job. It doesn't work for options, however, because Thinkorswim doesn't give you the access to that. Not for bots. All right, let's take a look at the sectors this morning. Everything that was opposite of yesterday. Tech is back down again. Keep your eye on finance with the dollar moving around and the bonds getting shook out like they are. Finance is the name of the game. Finance and energy. If you look through the sectors right now, energy's way up there. Let's go back so we can kind of grasp what I'm talking about here. Shut that in. All right, so there's the 9 sectors and the bonds, the indexes, right? So look at energy. You got your linear regression line on the daily chart. Energy sitting way up there. Well, think about a swing on a swing set, right? It goes X amount of distance one way and then X amount of distance another. When it gets up near the apex or the peak, whatever word that is, gets up to the peak, what do you think it does then? It doesn't pause there and then go higher. It pauses there and then turns back around and goes the other way because it's just this pendulum swing, right? Back and forth, back and forth, back and forth, back and forth. Well, look at it where energy is right now. And industrials, healthcare, right? So, a little bit of perspective, going to be focusing on energy today, just like we've been focusing on energy all week. There's been a lot of really great plays in energy, and then finance being the other side of that. If finance gets whacked again today because of what's going on in the bonds, and like we talked about the other day, bonds broke a critical level. And then yesterday, it got a lot worse. So we want to keep our eye on the bonds today, see if it breaks down below that big red candle of yesterday, or if it gets its butt back in the box where it belongs. Right? Look at the linear regression line there on the bonds, basically flat. We don't want to see that thing roll over and start pointing to the downside because we're already at a critical low. Right? So, consumer spending on the frivolous side, we're underneath it, headed back up. Frivolous or consumer spending on the household side, we're just back above it and kind of resting on it. But energy is the one that really stands out here. I'm looking for a little bit of mean reversion on this. Could see that activity starting to unfold today, which is why it's going to be on the list of things to watch. Plus, it's just a really rough day out there, and energy and finance always give us a good play. Well, not always, but that's what's been the play recently, right? So what's down? Bitcoin, cloud computing, the devil's metal, finance. Wow, SPY just flipped over. It didn't really just flip over. I think the thing just woke up. Come on, Trend Spider, stay awake. Utilities are kind of flat. The marijuana sector coming in a little bit. And then XLP, which is more of your exploration side, right? Getting that burst of activity this morning. We're back above the 50. All right, so you can see here on the weekly how energy is it's right there, ready for a make or break on the weekly. We're kind of sitting mid candle on the daily. So, we're primed up for some good moves. That's where I would focus my attention. If we look at the names of the most liquid traded products through January, we got that list from the CBOE website, and then we culled it down to the top 100 names. We do have some good movers this morning. Not a whole lot that are above 0.5%, but some of those energy names, Chevron, Occidental Petroleum, right? They got your casino or gambling names. Twitter's trying to heal itself a little bit from yesterday's chaos. So maybe kind of look for these names to turn around, right? I don't like hitting up on the top name lists, things that's already moved, 10%. I'd rather catch things that are near flat or maybe even slightly down on the day. Tesla got a little rowdy yesterday, and we're looking for this to reciprocate. Since it's a 0-day, I'm very likely going to run a 0-day on this. Tesla, NDX, or the SPX. And the NDX in the last 3 weeks has just been really, really horrible on liquidity. So, probably won't run a 0 on the NDX, but Tesla's got plenty of liquidity. So it's this, Google, Amazon, SPX, any of those are great products for a 0-day. And since it's Friday, pretty much anything with weekly options, is on the list. Remember, when we're looking at something like Tesla, we also want to look at its peer groups. What are the other EV markets doing? Right? Doesn't matter what you trade, you don't want to blindly stare at that one single chart and not pay attention to anything else that's moving on around it. These markets don't move in isolation. There is the old phrase, if your broker won't let you do something very common and simple and easy to do, get a new broker. If your broker doesn't offer you the tools that every other broker has, get a new broker. Now, for some of you that are not in America and you don't have a choice, you're stuck with something like IBKR. Well, I'm sorry, that sucks. I get it. But if you're in America and you've got a junk broker, that's your fault. Get a new broker. Yeah, it's that easy. I've got 15 different brokerages. We've got over 35 different accounts. No excuse, if you live in America, to not have a good broker that will offer you the tools that you need. Simple enough. So the chips are moving around a little bit this morning. We got TSM, AMD, NVIDIA. Notice all three chip names, right? So just like if we're looking at Tesla, we want to look at Ride, NIO, Li Auto, Ford, GM. We're looking at these chip names. We got multiple chip names that are up this morning. Almost all of them are up at least 0.5%. Behind that, we do got a couple of those energy names starting to come back in. So we're going to be looking for some setups in here. I'm already holding onto some Amazon, so I very likely will be in here today as well, at least running some short calls because I've got a long call that I'm already holding. I was running short calls on this yesterday. So some short calls and then maybe legging into a 0-day, right? So that'll be the game plan. I will be streaming this morning. I know there's nothing on the schedule showing that there's any streaming going on anywhere, but I will be streaming in the large caps starting at 9:15, just like we normally would. And we're going to cover, I don't really cover pennies. It's just not my jam. But, we'll go through futures and stocks and options outside of pennies. So I invite y'all to come on in and hang out, spend a little time Friday in the live stream with me. Yeah. And I will see you guys there.